Hey guys, it's gonna be a quick one today. This is Wednesday. Let's see, July 22nd, and you can see my premiums. I'm at 98,000 for the month because I just bought back a whole bunch of positions at 50, 60, 70, 80, 90%. And I want to go over that just real quickly. So in my daily actions, you've got one, and the way that this happened was all kind of automated. I have this monitoring action or capability in the tool that will monitor all my positions. And sometimes if you want, you can automate a lot of these positions such that if you want to buy it back at 50% profit. And all I mean when I say that is, let's say that again, that you had a car and you sold it for 500. You sold it for $500, but the next day you could buy it back for 250, and then you resell it, and again that day, and then tomorrow you buy it back for 250. So while you made 500 originally, you used 250 of that to buy it back, right? So you're still up 250. And then if you can do this multiple times a week, you're really blasting ahead in terms of your overall um, return on capital, which is really what you want to do. So last night I set all of my positions to automatically buy back at 50% or higher. So at 8 a.m. this morning, that's exactly what it did. Just came and bought all these back. And I was going to see something here. So you can see it right here. So earlier today, it found all these different positions. Here we can look at that was the manual execution history. Um, I was looking to see where I put the log. Here it is, execution log. So this morning, here's what happened. It bought back all of these because it hit the profit target. I bought back, was that Coke? KO? At 50%, Tesla at 50%. Um, well, that was the percentage threshold. Many of them were higher than that. You can see the P&L. So this was plus 12, is plus 225, plus 255, plus 285. So I was able to buy these back such that, I made at least 50% profit on it. So what that does in practice is, let's say that it was a cash secured put. You had some money, enough, we'll call it collateral, to write a contract, an insurance contract, what's called a cash secured put for someone's position. And if that stock drops to a certain level, that you'll purchase that. That's what the contract is that we've written. And the cool thing is you can write a contract today, buy it back tomorrow, but it's worth 500 today. It's only worth maybe 250 tomorrow, or it's only worth $10 in 3 days. And you might ask, well, how does that happen? How can you sell a car for 500, or a contract on Tesla for 500 one day, and then buy it back 3 days later for $30? Because of the time value of these positions, the time value of a stock, because the stock market's volatile. It's constantly going up and down and sideways. And that volatility allows you to purchase and to buy back a position at a much lesser price. And this is what I think a lot of people miss in option selling, is the opportunity to increase the velocity of your trades. And so I just wanted to touch on that briefly today. So that collateral that you had to tie up, like if I was going to buy a car, and I said, hey, if the market price of that car drops below 500, I'm going to buy the car for 500. That's what you're saying. But let's say that you buy it back for 250, and then you keep the original 250. Now you have 750 750 or 800. I can't remember which. Yeah, 750. So now with that 750, you have more collateral to now go sell a contract to potentially purchase a car at 750, and then so that's how you kind of keep building your portfolio over time. And the final thing I'll say is when you buy back a position, all that collateral becomes available. So if you made 200 and then you bought it back for 250, you have that 250, and then you sell it again for another 500. Now you've got the 750. And so if you're buying back positions consistently, you're not only you're getting the velocity of trades, but you're also getting you're releasing that capital to do more and more trades over time. So that's the point I want to make today. And then once your capital is released, I can go and I can sell more contracts on cash secured puts. So I'm gonna do this real quickly. You can see I've got 101 tickers out there, and I'm gonna scan these for new possibilities. And why not leverage those possibilities, right? So you might be asking, well, I don't know anyone else who does options trading. Is this a scam? Is it day trading? No. Day traders are foolish, in my opinion. I'm not saying you can't find a setup and make money with it, but with options selling, you're 100% in the driver's seat, always in the driver's seat. You're the house. The people out there buying your contracts, they might be gambling, but you're not. Never are you gambling. In fact, my win rate is in the high 80%, and it could be that for you as well. If you want to know more, just click on the link in the description box of this video, and you can take my course if you'd like to. All right, so right off the bat, BE looks nice. Microsoft looks nice. SpaceX looks nice. And Dell looks nice. They're all like they're in a pretty good profit range. There's a good variety of days to expiration. So I'm going to test these orders. I'm going to remember you always want to, there's buyers and sellers. And so I put it right in the middle. This is going to bring me back $1,825. So I'm going to go ahead and dry run that, make sure everything's good. And now I'm going to submit it. And there we go. Okay. And I see now I'm getting notifications that those have all closed. All right. If this is interesting to you, I have to tell you guys that you think, well, it seems like gambling. Well, when you just give your money to your 401k or pension or insurance, that's what they're doing with your money. So what I'm suggesting here is you can learn how to cut out the middleman and make returns of times 10 or times 20. And why wouldn't you want to do that? I don't know. Is there risk involved? Absolutely. And if you want to learn how to mitigate that risk, then keep following me here on this channel. Just go ahead and click to subscribe and like it too, if you would. That helps me out. And with that,